Move on, Asian Paints is going to be in focus. Will it paint a nice shade of green or not in the second quarter? Let's ask Mangalam. Mangalam?
Well, the difference is the business and the stock. The stock has been painting a fairly good shade of green over the last few days. You know, from the lows, it's up around 25%. The street senses a change in sentiment in the paint space, especially given the competitive intensity the street believes is perhaps behind. The valuations also not very demanding as they were earlier. But just from a business standpoint, the second quarter has been weak because of heavy and extended monsoons, weaker product mix. The competitive intensity has still been high. We've heard that from Berger as well, and increased cost of sales. So all of that would bear down on the company's overall performance. But remember, the same time last quarter was one of the weakest quarters that the company had reported in recent memory. So on account of that favorable base, optically these numbers, at least on the EBITDA front and the net profit, would look fairly strong. We're looking at a 1% revenue growth, 7% growth in the EBITDA. Margins are around 16.3%. Remember, this is an increase year on year, but it's still lower than the company's own guided band of 18 to 20%. And the net profit on a lower base grows by about 25% as well. Volume growth of anywhere between 4 to 6% is something that the street will like. But remember, a disappointment this time around may not disappoint the street when it comes to stock price performance, only because they believe the worst is perhaps priced in.
Thank you very much for that. 1%, Rakshit Hargave has caused so much to